Welcome back to the Real Estate Standard Podcast. This is episode 31, where commercial real estate and Bitcoin collide. I'm your host, Tim Kotzman. Today is August 4th, 2026. Each episode, we break down how serious operators, investors, and developers stay competitive and profitable in the 21st century by examining commercial real estate through the lens of Bitcoin. On today's episode, we'll be discussing the topic of cold storage, self-custody, Coldcard, and Bitcoiners helping Bitcoiners. I'm here with Chris Drizga and Kenny Alves. And I'm going to hand it right over to Kenny for an update on Westmain storage stacking.
Hey, Tim. As of today, August 4th, we hold 16.8 Bitcoin. So far this quarter, we've stacked over a half a Bitcoin and have a Bitcoin yield of 5%. Our Bitcoin per square foot is at 23,320 Satoshis. And we have officially achieved Bitcoin square foot parity last quarter. What is that? There's approximately 97 billion square feet of US commercial real estate. And if you were to divide all 21 million Bitcoin that will ever be across it, you'd end up with 21,649 Satoshis. So we've crossed that threshold by over 1,500 sats. And what do you think, Chris?
Yeah, I mean the last year of building this thing out has it's become a huge success in a very short period of time, and the fact that we can see quantifiable results and improvements in that short period of time is incredibly exciting. And I know we're going to get into it here a little bit today. We also had mentioned and covered it briefly last week, but I think there's going to be a shift here in the next, coming months and quarters from building out a focus of reinvesting the free cash flows and building out the Bitcoin treasury to some more operational needs. And I'm excited to get into that and keep, building, but just in that, with a focus on the operations rather than the treasury and some of the other components that have come along. So again, we're kind of tying in all these different components of the operations of the strategy, and it's coming full circle really nicely. So it's been a good run so far, and there's a lot of opportunity ahead.
Yeah, and on the real estate front, we had a commitment letter. We still have the commitment letter for a refinance, and we were going to close like right around now, like towards the end of last month, and we decided to push the closing back to the end of September. Right now, the closing date is scheduled for September 29th, and there's just so much uncertainty in the space that it would be irresponsible for us to kind of deploy that capital right now in a lump sum fashion. We were, planning to acquire digital credit. There's been headwinds with that. And we're kind of, taking it all in as well. We're going through this bear. It's one of the worst Bitcoin markets that I've seen in the 11 years that I've been in the space, that I've been paying attention to it. I think it's, when I first got involved, Chris, it was the aftermath of Mt. Gox. Now, for those that don't know, Mt. Gox was the first Bitcoin exchange, and they were hacked, and a lot of people lost their Bitcoin. And that's where this whole kind of push for self-custody came from, where your Bitcoin is not safe on exchanges, and it's that you can self-custody it better than an exchange. And now what we've seen here for those that don't know, there was a vulnerability found in a hardware wallet, Coldcard, manufactured by considered one of the best hardware wallets in the space. somebody using what seems to be AI LLMs had discovered a vulnerability in the software that was dormant for over 5 years, and it has been exploited. So, you know, no, we're moving around all over the place, but there's just so much going on. There's a critical vulnerability in hardware wallets. There's like a lot of the digital credit instruments are trading below par. Bitcoin is at the 200-week moving average or a little bit below that. And we at Westmain Storage have been allocating over 100% of our free cash flow towards Bitcoin, and we wanted to secure and build a position because last year was year zero, and we've secured 16 Bitcoin in our first year. We just announced another purchase that went through yesterday, today, and we're still going to be a buyer of Bitcoin. But as you mentioned, Chris, we have some upcoming expenses. Our parking lot, we could probably, restripe that and get that curb appeal up with the parking lot. There's some maintenance that we could address and be preemptive in that sense. And during the next few weeks, we may, decide to pause these DCA purchases mainly because of the BIP 110 concerns here. So I don't know where you want to start off today. I think I kind of covered, all the talking points that we want to touch on, and maybe you want to unpack it a little bit, Chris.
Yeah, I mean, starting with the Coldcard situation, I mean, there's no other way around it. It's a catastrophic failure. It is, the biggest stain on Bitcoin history thus far. I think it runs circles around Mount Gox, just because it affects people that were doing, what was the right thing. They had done the work. They were doing what they thought was the best thing, and unfortunately, there was a hole in that. So I'm not going to beat around the bush. It's a catastrophic failure. I feel for anyone and everybody that's been affected, large, medium, small. And my thoughts and prayers go out to everybody in that situation. I know I've lost sleep over the last handful of days, just even though I was unaffected, just having a hard time, thinking through all of it and coming to terms with it. It's a really, really, really shitty situation. So
Let's kind of dive into what actually happened. Block did a pretty good write-up, and I think they're showing their like the live response team in the space when it comes to this stuff. They've been very active, and it wasn't their product that was exploited. But what happened here was there's essentially a few different ways that you can generate a wallet with the Coldcard, right, Chris? And one of those methods is a lot more can be considered a lot more secure, and it's proven actually to be a lot more secure now, um, with different options in creating that address. And so one is kind of like an easier time. It's less secure, and it's kind of like a faster way to set up the wallet, which doesn't force you into creating your own entropy, and you rely solely on the Coldcard software to create your entropy, your randomness, while creating the Bitcoin address. And I mean, this is something that wasn't really talked about at all.
I've seen stuff over the years that has talked about this particular piece, whether it's the entropy, the random number generator, but it's definitely not a frequent topic or a a topic that's been discussed at length in the, at least that I'm aware of. I mean, for those that are not, in the weeds on this, there was a flaw with the device and how it generates your recovery, your seed phrase, which is the holy grail to the Bitcoin. So the devices that were affected were single signature setups. There was a single point of failure. Unfortunately, that single point was exploited. To your point, Kenny, I think Block did a really good write up on that. And Rob Hamilton has been doing a really good job in real time the last almost 4 days, I think, with different updates and investing his own funds to audit other systems and just do more due diligence. The BPI actually put out a really, really good video the other day, trying to not quantify, but also just kind of help people visualize, the what you're talking about here with the randomness and the number of possibilities and of passphrases and all of that. So go check out the video that BPI put out. It's short, 30 seconds, but it's very very well done, and really kind of helps people understand the issue at hand. Um, the one thing, one of the positive things here is seeing the community rally. Despite the bear market, despite the BIP 110 situation, despite the treasury company situation, despite all the headwinds, it was really nice to see people rally together, help one another, get the word out, put plans in place to migrate funds and get them onto safe devices, all of that. It's ongoing. So just to see everybody kind of put their differences aside and rally has definitely been encouraging. I think the number last I saw was 1,600 Bitcoin over, I think, a little over 7,000 addresses. And based off some of the research that Galaxy Digital has been doing the last few days, is the vast majority of the addresses hacked were held less than one Bitcoin. So you can imagine who those sats belong to, and it's us, right? It's retail, it's the small guys that again, were doing the right thing. They were living underneath their means. They were stacking sats and being humble. They had long time preference, and unfortunately, that's who's been affected most. So I'll kind
Yeah.
of leave that there, but
Well, I want to
I don't
dig
think we need
into.
to. Do we
I
need
want
to
to
get
dig
into the
into the
technicals?
why this, how this could occur, right? So Bitcoin is open source software. There's been so many eyes on it because it's open source and you can build on it. Any company, any person, they can build on it. It's open, and a lot of the software in the space has been open sourced. The first hardware wallet ever, I think, was by Trezor, was open source. CoinKite was originally fully open source when they launched their code, and there was a lot of eyeballs on it because people could build on top of it. They could use that code in their products and their software, and it created a very secure code base. And something to note here is that 5 years ago, when this bug was introduced, the way that the bug was introduced was when the team at Coldcard, at CoinKite, decided that they wanted to have protection against their code so competitors couldn't use it. They had a competitor that basically cloned their software. I'm not going to name names, it's not really important, but they kind of, in a sense, kind of, became anti open source by closing that code to the public, meaning less eyeballs would be looking at their code, right? And that's when the bug was introduced. And it's my opinion, I think, because it wasn't open sourced. So I say this because I've spent a lot of time this past weekend helping people rotate their keys and get off of CoinKite devices. And for the less technical people, I recommended they go back to exchanges. For the more technical people, I recommended multi-sig, multi-vendor, multi-sig. And I really want to highlight how important it is to support and use open source code, because that's where the checks and balances lie. Open source code is so secure because it has all these eyeballs just laser focus on the code. That's why Bitcoin is so secure, because it's open source. If Bitcoin was closed source, you wouldn't have the eyeballs and the security audits and the yeah. So I guess maybe we don't have to go too much into the technicals, but it's important to know the origin here of how this bug was introduced. And it was dormant for 5 years. So it goes against the entire ethos of the Bitcoin community. Don't trust, verify. There is a lot of people in the space recommending this hardware wallet. And I think it's important that a deep dive, an autopsy, an analysis, a deep analysis is done on this. And I think, we're just starting to see it all makes sense, recovering, the commits from the code and auditing all of that. And there's plenty of people in the space looking at it now. But the point is, why weren't these people looking at it before? Why is it now? Just because there's an exploit, right? Because there's a bug. This could have been avoided had it been stayed open source. So I think moving forward, it's important that all these hardware companies open source their code so that they can have a strong product. And most of them do. Most of them have read only, and meaning you can't like use the code yourself to replicate it for commercial use. And I think hardware wallet manufacturers should reconsider what license they use while offering this code to the community, because you're building on open source technology. I can't say it enough. Bitcoin is open source.
Yeah, I mean, open source is incredibly important. Largely an afterthought for most people. And if they weren't already, I mean, shame on us, I guess, for assuming this. But if they were not already utilizing AI and LLMs and all these different models to review and improve and look for bugs and check their SIX, you know they will be now. That's for sure. And I think that's the silver lining in all of this is, is self-custody dead? No, absolutely not. Anybody that tells you that is, they either don't get it or they have ulterior motives, full stop. Self-custody will build on this. It will become bigger, better, stronger. It will get hardened on the back of this event, and we're going to use AI to do that. It's unfortunate that something like this had to occur for all of that to, have to happen. But, that's the reality we're in, and we're going to play the cards we're dealt. So self-custody will be, it is and will continue to be incredibly important, and it's only going to improve from here. I think you kind of alluded to it, Kenny, there, just rethinking how you're handling it, the vendors you're using. I know we haven't recommended any vendors on this pod before, but we have stressed the importance of using Bitcoin only vendors and providers. We've stressed the importance of looking for open source providers and standards. So those are, those still hold true. Nothing's changed there. And for the real estate, kind of bringing it full circle here with the real estate and integrating Bitcoin strategies and policies into your real estate business, that is still just as relevant. The thesis hasn't changed. Bitcoin hasn't changed, for that matter. It is still producing blocks every 10 minutes and moving along. I mean, even on the back of this news, news break-in that the price didn't move one bit, right? So yeah, the thesis on Bitcoin doesn't change. I still recommend you look at and consider ways to integrate it into your real estate business and real estate investments. It will serve the purpose of improving, enhancing the asset class and helping you navigate different market environments, helping you navigate this transition, into the 21st century, into the exponential age of technology. You just have to you have to start with a really, really thoughtful, robust plan. And again, we have talked about it on this many times before. Security and custody should not be afterthoughts. They have to be treated with the highest priority. And this goes. We talked about it on the tax loss harvest episode, Kenny. On that episode, we were talking about how your record keeping and your kind of back office protocols made that tax loss harvest transaction so seamless, right? The same thing applies here, right? Before you go and do a treasury strategy for your business, for your investments, you look at the capital stack or the operations, whatever it is. You don't just go and buy the Bitcoin, right? The first step is to sit down and develop processes, procedures, policies, and understand how they work with your particular setup. I just wanted to kind of reinforce some of those points here before we get too into the weeds on some of these things.
Yeah, I think it's important before you adopt this as a business, you have to have an understanding as an individual. I've said it before that you should be able to explain this to your customers. If you're going to accept Bitcoin or, have Bitcoin on your balance sheet, you need to be able to explain this to your customers and your investors and any partners as it comes up. And with self custody, I think like what we've seen is like the product market fit has been cemented in the sense that self custody is a real skill set. For a company to be able to take their Bitcoin into their custody, like I think we've seen in the industry as a whole, like everybody downplay the seriousness of self custody. Um, and like kind of brush it off like anyone can do this. Like while I believe Bitcoin is for everyone, Satoshi, Hal Finney, the early Bitcoiners all knew that Bitcoin doesn't scale to every single individual on Earth. That you would need. It's kind of the Uncle Jim scenario where you need a leader in your community, your family, your business to understand it, to educate your people, and to be able to custody it for a group. And that's essentially what we're going to see with the banks and the treasury companies. And so it's I think what the message needs to be is it's not, Bitcoin and chill. It's, Bitcoin and study. Like you need to be active. You need to stay disciplined. You need to, also um invest more time in, like, it's like a reoccurring education that needs to happen. Like when you're a real estate agent or a broker or a professional, you have to have your reoccurring education. You have to update your license. You got to make sure that you're in tune with what's going on in your industry. And that applies to Bitcoin. I think that if you're going to be taking self custody, you should be constantly reevaluating your security, and how you're going about that self custody. And I
Yeah.
also don't think it's all or nothing, Chris. Like I think like you don't have to like have all your Bitcoin in self custody. You can have some on an exchange, just like what you do with your money, right? You have some in the bank account. You might have some cash in your pocket for walking around money. You might have a safe at your house with some
Yep.
cash there. You might have a safety deposit box, or you have different baskets and buckets of money, and that's the same for Bitcoin. You might want to have some on the Lightning Network. You may want to have some in self custody. You may want to have some on the exchange, and that conversation should be happening frequently. Like it shouldn't be. And I kind of felt a little guilty of this myself, kind of putting Bitcoin in cold storage and forgetting about it. And I think the lesson here is you got to stay vigilant. You can't forget about this stuff. You got to, you want to be able to, it's kind of like the guys that are training at the gun range. You want to be able to quick draw, right? In this situation that just happened the past 72 hours, right?
Yeah.
If you weren't able to access your Bitcoin and you forgot how to do an on-chain transaction and you forgot how to sweep your wallet, that was precious time that could have meant your Bitcoin being compromised. And
Tim, you were going to jump in there.
oh, sorry.
I didn't want to interrupt, but yeah, just thinking through all of this reminds me a little bit of Ed Julien wrote an article I published on my Substack late last night, early this morning. And he kind of says, like, he said the equivalent of, like, there is no free lunch. Like, you're either trusting a third party, hopefully institutional custodian, or you're trusting, in a lot of these cases, the software on some of these devices. And not to bring treasury companies immediately into the fold, but, the leading, biggest treasury companies use at least 2 or 3 institutional custodians. They don't use 1 or 2. So I just find it surprising that, and people are free to do whatever they want to do. I just find it surprising that, and I have to assume a few things here, that someone would keep all 50 of their Bitcoin on 1 device. That's their decision if they want to do it. But
no, I think the point's well taken. I mean, it's like,
you really are rolling the dice, whether you're with a centralized exchange or you have it in cold storage. And of course, as you said, Chris, and I think you hit on it, Kenny, as well, like self custody hasn't failed. There's, at least half a dozen companies that, are respected and do great work, and that, people are, recommending, or at least saying, hey, go do your own research on these other solutions. And, from what I've read online, I think CoinKite actually did do some sort of audit like a week before this happened, and they didn't catch anything. Now, whether that's accurate or not, I don't know. But, like, let's say that they did, I think it underscores the importance of just how quickly technology and AI is moving, with people being able to really do things that we just literally couldn't technically do before. So a lot of like silver linings, even though this is horrific, but there are some, the Robs of the world, a lot of people helping in this time, and also a real call to action of, what are we really doing here? Let's be thoughtful moving forward.
Yeah, I mean, to one of the earlier points you made there, Tim. I mean, you can't eliminate all points of failure, and you can't, fully verify everything, right? Like, no one's gonna, look you in the eye and tell you that they can verify CoinKite's supply chain, or Trezor, or Ledger, or, Jade, for that matter, right? So yeah, there are there are attack surfaces, there are gaps in all of that. I won't name them here and lay out, give anybody ideas, but I think there are other ways to attack the network as well. And there's a saying, first they laugh at you, then they fight you, then they join you. I think I butchered that, but I think it's safe to say we are firmly in the, then they fight you phase. right? I think this thing, putting on the tinfoil hat, this whole thing absolutely reeks from a couple different angles. You have the Clarity Act going on. You have the BIP 110 drama. You have this, Security Council that was, backed by some of the pubcos the last few weeks. That's got some, that kind of rhymes with the Mining Council from back in the day as well. You have the attack on free and open source software. As you mentioned, Kenny, you have developer protections getting horse traded on the Hill. So there's all these, different just attacks happening simultaneously. And, to not be able to, be skeptical and ask some of these critical questions, I think would be a mistake. I'll leave that there.
Before I put on my tinfoil hat, because I do have opinions as well,
You got one too, huh?
I just want to kind of double click on the self custody with exchanges, right? Like I first off, the term self custody is kind of just like a bad like term, right? It reminds me of George Carlin when they call it like a near miss when there's you know when you're flying planes. It's not a near miss, it's a near hit, right? You almost get hit. So what I mean is, whether you're an exchange or a company or an individual, somebody is taking custody of that Bitcoin. Like at a certain level, you cannot, you know, sub that out. You can't, like somebody has the custody of the Bitcoin, right? The attacker who's attacking these cold card devices, they're not sending it to an exchange. They are custodying that Bitcoin, right? And if self custody, and I hope we can come up with a better term or coin a better phrase for the industry, but if that is to kind of be stripped away in a sense, if self custody is stripped away, the value proposition for Bitcoin greatly diminishes. It's very important that we um, honor self custody and like encourage it for those that are willing to take that risk. I wouldn't call it a risk, but that responsibility. If if people are willing to take that responsibility, they're willing to, learn, understand, and educate themselves and spend 10,000 hours understanding Bitcoin, not like charts and number go up and that type of stuff, but actually understanding the protocol, the software, the code. I think that we need more people willing to do that.
Yeah, I agree with you. Well said. The fact of the matter is, most people don't want that. They don't want the freedom. They don't want the responsibility. They don't want the accountability. I kind of had to learn that the hard way in my own journey here, whether it's Bitcoin or any number of other, facets of life. Right? I mean, look at Fauci's, not deposition, but hearing on Capitol Hill last week. I mean, it's a complete abomination, and you still got people, saying, "Oh, it's a witch hunt." Like, are, you got screws missing loose in the head, man. Are you kidding me?
Well, I
And you
kind
can
of
go
feel
down the list. That's not the only example, right? There's all these different examples, especially in the last, half dozen years or so. And unfortunately, people don't want, full freedom. They don't want to accept responsibility or accountability, and that's fine, right? You're going to live in your own little, ecosystem, and and that's going to be your reality. But for those that understand what's going on here and want to take those things into their own hands and you know set things up for their family accordingly, the opportunity's never been better.
if you want your business, or if like you want to, climb the ladder, so to speak, in the world, and you don't take self custody, you're kind of forfeiting, these. these like things like in the future, right? Like it's only going to get harder to acquire Bitcoin over time, right? As more people start to understand it. And there's people, and they might be right that treasury companies, the ETFs, they will get, up to 50% of the total supply. Like they could end up having 10 million Bitcoin in their possession by the time people actually realize like that they do want to self custody, right? Like you don't want to do something until you kind of have to, until you're
Yeah.
like your back's against the wall and the exchange is saying, hey, you actually can't send that Bitcoin. We're gonna throttle you. You can only send, 100,000 a week, or they're gonna tell you how you can use your Bitcoin. And when that happens, you're gonna see people jump for self custody, but the price is gonna be high. The bar is going to be higher to get there, right? It's going to be harder to buy the Bitcoin on an exchange, send it off the exchange. There
The
might be
door will have
exchanges.
closed, right? That's what you're saying, right? The door will have closed when everybody is rushing to the exit at this same time, right?
Yeah.
It's I mean, financial markets, people in financial markets know that better than everybody, right? They all know that something's off, right? They all know that the game is rigged to some extent, right? But they continue dancing, they continue playing, they continue, partying, right? And they all think that when the music stops, they're going to be able to grab the last chair, right? Or rush for the exits and get out before the guy next to him does. It's the same thing over and over.
Yeah, and I think it's just really hitting home. I know that like our audience, we have both, people on the Bitcoin side and people on the real estate side, but I think we need to kind of just spend more time for the people on the real estate side to just really help them understand what's going on. Um, Not just with this kind of self custody problem or issue here, but like the greater problem, which is the money is bad. The money has been poisoned, and we're relying, like if you don't take custody of the Bitcoin, you're relying on the same people to that you that you custody your dollars with, right? To custody your Bitcoin, and I think there's something to be said for that. So I think
Yeah.
we just need to kind of, think about that offline, Chris, and hopefully we can come back and have some different metaphors and analogies for the real estate audience, because it's, in my opinion, like the war on self custody. Let me put my tinfoil hat on now, right? Like I think that this is a then they fight you stage, and that they're, that I don't know who's doing the attacking, whether it's a state level, whether it's at a treasury company level, whether it's a big treasury company. But the fact that the attacker is sending all the stolen Bitcoin to just a handful of addresses is like almost like very suspicious, because there's nothing stopping him from sending each transaction to a new address. And
Mm-hmm.
that doesn't take more resources, that doesn't take more time, really. That can be done very easily. um, and so it's almost like they want to get caught. It's like like the goal here isn't to actually steal the Bitcoin, but to instill fear
Yeah.
into self custody. And this could be, a nation state, it could be a company, it could be a group of companies. And who are the beneficiaries from this? The exchanges, the treasury companies, and some of these other hardware wallets, but mainly the exchanges, right? Like I think that there was a record number of inflows,
Yeah.
probably I got to look up the on-chain analytics, but I would bet you that we saw a spike in transactions heading into the exchanges.
Exchanges and ETFs, right? Um, and again, I think the timing of it all is just super suspicious. Yeah,
Yeah,
it just
5 years this bug was dormant. So
yeah,
a
and now
week
you
before mandatory minor activation is about to, or I guess the correct term is minor signaling, mandatory minor signaling, right? We're what, 4 days away from the start of mandatory minor signaling, and this 5-year-old dormant bug is just exposed out of nowhere. It's very suspicious. Also, another kind of thing that might
Well,
give you
and
some.
clarity is supposed to be voted on in 2 or 3 days as well, right? There was self-custody provisions in there. There's, open source developer protections in there that are all under consideration and have some implications. I mean, the timing just fucking reeks. Excuse my language, but let's call it like it is. What were you
Well,
gonna
the
say?
other thing is, when this bug was introduced, it was like 2021. That was
Mhm.
right around the time that the ETFs were coming on the scene, right? And like, am I right about that? Have they been here for that
I
long?
think they were. I think they were later, if I'm not mistaken. Weren't they 22?
I'm gonna have to double check on that, but
Yeah, we got to
I
fact
think
check that one.
we're gonna have to fact check that.
Because if I think they were announced maybe 22. 'Cause something's saying to me that they can't May of 2024. Tim? Can we get a quick fact check here? Fact check. Fact check 1 2.
We'll have to get back with the fact check. I mean, we need to wrap this up in a little bit, but BIP 110, more technical things is not my lane at all. Can one or both of you explain why you would not feel comfortable buying, like making a Bitcoin purchase while some of these activities and deadlines are coming up? I just sincerely do not understand like what the issue would be.
Yeah, happy to talk about that. I just looked it up, Chris. The launch date was October 19th, 2021.
Of the ETFs.
The first big, I mean, this is Google AI. Yeah, it's saying October
Okay.
19th, 2021.
All right. Cool.
And last thing I'll say about that, I think it didn't start trading until after that. Maybe that's when it was announced. But one thing to also note was, the language in those ETFs of how they would decide which, if there were a fork, how they would decide what version of Bitcoin they would, use.
Yep.
But back to tinfoil hats off right now. Now back to Tim's question
Tim's
here.
question.
It's a good question. And for someone who takes Bitcoin self-custody, it's when you're transacting on chain during this time, there's a chance that if you choose or decide the wrong chain, if you spend or make any transactions during this time, that it could be you could be transacting on the fake Bitcoin, I guess you would say, like in a chain split scenario where two chains are running parallel, one will eventually win and like be crowned the Bitcoin, right? Um, if you transact on the 110 chain and that loses, or if you transact on the core chain and that loses, you're risking your Bitcoin. You could have purchased, in a sense, not real Bitcoin, because when you send it off in exchange, if you're running a BIP 110 node, you're going to have Bitcoin on the 110 chain. You may or may not have Bitcoin. Like if we're on a fork, you're not going to have Bitcoin on the core chain. So you basically got to pick a side, right? And it's very kind of risky to do that. So a lot of people, what they do is decide, well, I'm not going to transact until this works itself out, because over time, one of the chains will become the strongest chain and the longest chain and have the hash power allocated to it and will carry on as the Bitcoin chain.
So let me just kind of interject here with a question. I think kind of help bring this together for Tim is for people that are not transacting in Bitcoin on a regular basis, right? They're basically just buying it from an exchange and putting it into storage, right? If you're using Coinbase or River or any of the other exchanges, what is the risk, right? So Tim has a DCA that hits, once a week. Are those sats that are acquired during that period at risk or tainted in any way? Is that a fair question, Tim? Okay.
Yeah. So like when if you're buying the Bitcoin on exchange, right? The exchange is going to dictate which Bitcoin chain that they're going to go with. I think I said it a few weeks ago, when you leave your Bitcoin on exchange, you are giving the exchange a power of attorney over your Bitcoin. They are going to choose for you what chain you're going to follow. And if you're going to send Bitcoin from the exchange to your self-custody wallet, there's a chance that they supported the opposite chain that you intend to support. And so when that transaction goes through, the Bitcoin might not make it there, right? Well, like it depends. I mean, it's like very like tough to talk about, like because there's so many like potential outcomes. But if
Yeah.
the chains are like basically in agreement, if 110 and the legacy chain are both on the same page, and that would mean that there's no large opportuns or arbitrary data transactions transacting in the blockchain and confirming on the blockchain. That would mean that both chains are in sync, and it's basically there's no split at that point. It's a single chain. But it has at the any point in time there could be a large opportun or a large arbitrary data transaction that would cause the chains to split. That doesn't mean that they're actually separate chains. It's almost like like a a Siamese twin that's sharing the same body, right? Like they're pulling in opposite directions. They could be kind of going against each other. I don't know if that's the best analogy, but
I mean,
it
so what is the practical advice for us and those that are listening here that are, again, maybe they're not transacting day to day and with Bitcoin, but they are DCAing on some regular cadence, and this month of August is going to have some impact, more or less. Do you have any
my
suggestions on
advice
that?
my advice is do not transact on chain. If you're going to buy Bitcoin on an exchange, just know that if you buy it and you might not be buying one BIP 110 Bitcoin, or you don't know the outcome of what Bitcoin you're buying. If you're um, trying to make your own decision, right? Like you're going to have a very difficult time because you're trusting the exchange, like you're trusting their definition of how they're going to define Bitcoin. So
Fair.
your definition of Bitcoin may be different. It may be one BIP 110 compliant Bitcoin, which has the possibility to segregate and basically veer off and split.
And as this process unfolds, Tim, over the next 3 to 4 weeks here, we'll keep bringing this up. I think that's probably a good thing to kind of revisit over the next 3, 4, 5 weeks as this thing, progresses. And we'll do our best to keep everybody up to speed.
I'll just say this is all sounding very technical, and from a non-technical, almost normie perspective, this is not helpful at all for the adoption of the asset. Full stop. Like this
Fair.
is not helpful. Like the Coldcard incident is not helpful.
Yep. I think you're exactly right. I mean, that's why I said the timing on all of this sucks, right? I mean, you have this Coldcard exploit, you have the BIP 110 stuff, and all the other things we talked about. It's just raises an eyebrow at the very least. So I know we got to jump into closing thoughts here and wrap it up. I mean, I'll keep it short. If you've gotten this far into Kenny and I's rant today, and and it's just now dawning on you, you have a Coldcard, move the funds ASAP. feel free to reach out to myself or Kenny, and we will do anything and everything we can to point you in the right direction, connect you with the right folks. We'll do everything we can to help you and your friends, your colleagues, your family, get through this situation.
Yeah, my quick closing thoughts would be, just to pay attention these next few weeks. Just keep like an ear to the street. You just want to make sure you're following what's going on here. I will say there is a silver lining, through all this chaos is, like where how Bitcoin grows and gets battle tested and battle hardened. We went through this 9 years ago in 2017 with the SegWit fork, soft fork, which resulted in, Bitcoin Cash. And so we've been here before. History doesn't rhyme, or history doesn't repeat, but it rhymes. And
Yep.
so it's very kind of similar in the sense of how it's a soft fork, and there was a lot of confusion, chaos, FUD, fear, doubt, and uncertainty. Or I think I botched that one too, but yeah, I think that we'll come out stronger. Once we get through this, it's not the best, like you said, Tim, for the space and for new people and adoption, but Bitcoin will be stronger because of this. Bitcoin has to prove itself it seems like every, decade, and here we are, and this will um, be remembered and looked back on, and it will be very important for Bitcoin's future. So, yeah.
I think my closing thoughts are just it's not the end of the story yet. And to be very clear, I'm not trying to create any sort of false hope for anyone regarding the Coldcard incident. But Bitcoin is famous for people thinking that it's this like money for criminals, but the reality could not be more opposite. I mean, you have or should have eyes from every three-letter agency on this stuff, and it is able to be tracked. And that's me as a non-technical person saying that. So it's not the end of the story. I'm not saying that to give anyone false hope, but hopefully everyone comes out of this stronger, and it's developing every day. So thanks everybody for listening to episode 31. That's it for today. If you found this conversation useful, please share it with someone, a partner, a client, somebody operating in the Bitcoin and real estate market. New episodes drop weekly. Until next time, for Chris Drizga and Kenny Alves, I'm Tim Kotzman. Stay disciplined, think long term, and stack Satoshis. This is the Real Estate Standard Podcast. If you enjoyed today's conversation and you own commercial real estate, we'd encourage you to think about how these broader shifts might impact your own property over the next decade. Many owners are starting to reconsider how they structure their balance sheets, manage capital, and position their assets for the future. If you'd like to explore how some of these ideas might apply to your own situation, you're welcome to reach out. We work with property owners and investors to think through strategy, structure, and long-term positioning in a rapidly changing market. You can find our contact information in the show notes.